I'm going to speak for about 20 minutes and then pass on to my colleagues who will give short presentations. And then we would open up for questions, and hopefully this will work out. The operative word being hopefully. So I think we're all from different parts of Europe. There's a big constituency here from the UK. I can count at least 4 of us that are calling from the UK, and we have Mark Nisberg from California, very, very, very early in the morning. So we are grateful for him to join us at this time. So yeah, welcome also to the audience. We can't hear or see you, but hopefully we will be able to relate. You'll be able to relate the questions for us through our organizer of this AI4People Summit. We are the Banking and Finance Committee, and we talk to you a little bit about where we are so far in the draft report that we have. So I'll begin, and I'm going to say a few comments on this sector compared possibly to the other sectors that you are going to hear about today and tomorrow. Maybe 3 comments would be helpful at this point. One is the size. Banking and finance is a very, very large sector compared to some of the other sectors that you are seeing here. It includes in it industries that are massive on their own right, things like wealth management, payments, consumer finance, trading, hedge funds, and so on, and also insurance. I know there is a separate insurance committee. I'm a member of that as well, and we will be presenting tomorrow, but of course insurance is part of finance. So part of the challenge that we are facing is that it's such a wide industry, which is so many different subsections that you could argue each of them is an industry of its own right within it. So that's one thing to note, the kind of scale of what we are up against here. The second thing I wanted to mention about banking and finance is this is highly, highly, highly regulated. This is an industry where really regulation is the story of finance to a large extent. It's regulated and it's complicated. And I know at least one of the speakers later, John, has more experience than me with regulation in the UK, and some of the speakers have good experiences in, I think, in Italy and in Germany, but regulation is in finance is important. It's kind of what defines the industry to some extent. What we see, the number of players, the size of the players, and so on, is largely determined by the regulation. But it's very complicated when we look at Europe, because the different countries have different structures. So you have some countries where you have one regulator that kind of deals with it all, like in the UK. You have others where you have 2 large regulators, one that deals with the consumer side and one that deals with industry. And you have some where you have 3 and sometimes 4 layers of regulators for each of the sub sections that I mentioned to you earlier. So again, this is an issue, a big issue here. And so when we as a committee, when we were thinking about these things, we were very much bearing that in mind, that this is who would be having to implement all these things. So there is a complication at that level. So it's a very big industry with very large, complex regulation already. The third thing I want to mention is that there is already a history of using AI in finance that is perhaps more than some of the other sectors that you will see. So finance and computers go hand in hand, partially because finance had large data and clean data, and partially because the finance and banks have money. So they were always at the front of using all kind of technologies. So can I ask the other members to mute themselves? I think it will, while you're not speaking, I think there's some kind of background noise. Thank you. So there's always been some form of computing in finance, but a lot of it will be what we now call AI. So if we look, for example, at algorithmic trading, That's been happening in hedge funds since the 1980s. You have computerized systems, algorithms that process the data and make decisions on how to invest. Pretty much what we now call AI, already, in place since the late 80s and throughout the 90s and clearly throughout the 2000s. This is a really, really, really big thing. So it's not completely new. It's not the cars where it's sort of gradual, and now for the first time we have an element of self-driving in cars, which we didn't have before. Here it's more, if you like, an evolution rather than a revolution in terms of the usage of technology in this sector. So these are the three kind of big things that I think characterize banking and finance with regards to the use of AI that we had to think of. A little bit about the last point. So I mentioned the history, but the sort of the history accelerates now with what we now call fintech. That there's been tremendous change in finance from after the last financial crisis of 2007-8, and that sort of became, so the governments were thinking banks stop lending to customers, they stopped lending to small businesses. There were lots of issues. The reputation of banks were severely damaged once taxpayers' money had to be used to bail some of them out. And that led some governments to think about, for lack of a better word, relaxing or changing the regulation around finance to encourage innovation. And we've seen it in the UK very strongly around 2012, where really things started to happen. We're seeing it in all parts of Europe now as well. And of course, in the US. In the US was, interestingly, the last country to kind of get on board, because it took a while for the Jobs Act to be agreed on. But they clearly are on board now, and we're seeing huge amount of innovation there as well. So in terms of change, this has been a vehicle through which a lot of the AI stuff we're seeing is coming through. It's possible for startups to come into finance in a way that was very, very difficult before, because the fixed cost of dealing with regulation was so high that really small firms with an idea of, whatever peer-to-peer lending or transfer across countries and so on, all these things were just too expensive to think about and to implement before. And now, as the government changed their attitudes, this is becoming much more popular. And so we see the explosion of what we now call fintechs, and huge part of that is AI. Many of these companies use AI to enable them to do whatever it is that they're doing. And that has, within fintech, so I talked about the government intervention and the wanting of this to happen to increase innovation in finance, but there's obviously also what we call the technology push led by these things. This is a smartphone, which everybody on the planet have now. More people have these things than people who have bank accounts, for example. So that's clearly a big thing. And so you have the ability now to to give very small loans to people within seconds or fractions of seconds. And clearly all these things can only be done using algorithmic decision-making or AI. And so the industry has been on the front of technology and the use of technologies and algorithmic decision-making from its early days, and it's accelerating significantly now. Now, overall, we think it's a positive thing, because if we think of the challenges faced by finance, things like financial inclusion, financial independence, financial well-being, and financial engagement. So all these four topics that I've mentioned are really important for decision makers, for society overall. AI has the potential of addressing all of these and making us better with finance. It makes obviously inclusion, not just in the third world, but within Europe, we have still people who do not have bank accounts, or we have people who do have bank accounts, but they don't earn very much and they really get very little access to services, to savings, to more interesting products, to planning. These things were kind of really too expensive for them. They never really thought they could do that. And even if they had access to these things, maybe they didn't have the confidence to deal with that because finance has been seen as something that, I don't know, it's not really for me. We see it a lot with gender, for example, but a lot of women, very educated women, tend not to get involved so much with the financial planning of a family and so on. In Europe, in the UK, I've seen many studies like that. So this idea of making it more, maybe people more engaged with their finances, making them more independent, the ability to save. So this thing that all the fintechs now do, goal-based savings, that's a really good thing to do. And if you can have an AI component to that helps you deal with that, that means you can reduce the cost and offer it to anyone in the street or someone with very little savings, that clearly is a good thing. So we'll be able to touch on all those things. So I'm going very quickly through kind of our general thoughts, but just to set the agenda, so to speak. But hopefully we will be able to elaborate on this and take questions. So I just want to talk now in the last 5 minutes I have about the specific risks and challenges that we have seen. So given everything I said to you in the beginning, you realize this is a big industry. There's lots and lots of challenges. What we did is we kind of focused on four. Maybe obviously there's more, but we think these are four that are worth thinking of. So these are four risks that we think should be addressed. And the first being that regulators who we trust to protect us from these people that are kind of taking our money and doing things with our money on our behalf, that regulators may lack the technical skills to now deal with some of these technologies. And we talked a lot about this in the committee, and we have some recommendations that specifically deal with that. And I see it in my work with the FCA, and I think John will speak about it a little bit later, possibly as well. But these are people who are very good at going to an institution and figuring out that they are kosher, that they're doing what they're supposed to be doing, that there isn't any kind of, shenanigans going on, and the money is used the way they promised to use it and so on. But it is a little bit different when all of the decisions are made by algorithms. How do you regulate that? How do you make your checks around that? And part of that is that you have the confidence that you have the skills, the technical skills as a regulator, and to be able to ask the right questions. So this is certainly something we see as very, very important. And certainly in the FCA, I know they're hiring so many of our graduates now that have technical degrees and technical knowledge. And it's not just really understanding the law, but it's also understanding what a cryptocurrency is and what a blockchain is and what all these technologies mean. And I think that is definitely an area to watch. The second area to watch of risk that we talked about is kind of the flip side of this. Now you have a lot more engineers and data scientists and working in finance. Are they aware of what regulation is and what the ethical requirements are? And the example we thought of is the social media, because there was this Netflix documentary, maybe lots of you watched, The Social Dilemma. And the idea being is that you have engineers and they are told, get me something that achieves X. In this case, with the social media, it was engagement. In our case, would be an algorithm that predicts with, epsilon more accuracy whether the person is good credit or bad credit and so on. And they have enormous set of data, but they can lose sight of what it all means. And if they, for example, gain that data by, sorry, gain that advantage by deducing from the data information that they shouldn't really, like gender, then they're not really understanding that they're doing something bad. That makes sense, because they are actually thinking they're doing something good. They are achieving the goal that they were asked to achieve, and they're doing really well on that. So there's a disconnect there that we thought it's important to address as well. The last two areas that we mentioned are not new in banking and finance. They're risks that always existed, but we feel that they have become more significant with AI. One is complacency and the other is data breach. And complacency is, every organization has to always worry about complexity and about, being on the ball and so on. But we feel that might be a little bit harder to do when you have algorithms that make these decisions all the time. And it kind of looks like everything is working smoothly. But maybe there's a little, there's sort of the boat of kind of slightly doing deviated instead doing something slightly different. And because you are reliant on it, a bit like all those drivers you see on these, in these clips you can find on YouTube on these test drivers on the self-driving cars who are kind of playing on the computer and playing on their phone and don't realize they're about to crash into something. So there's a little bit of that. And we think that there need to be protocols and there need to be some thoughts about that. And finally, I mentioned data breach. Now, that is a risk that we know, and there's a huge amount of regulation already, but it is important to mention that AI systems are data hungry. So they're using more and more and more and more data, and they want more and more data. And, with the fintechs now, before when I went to the bank, they said, oh, hello, Mr. Vulkan, goodbye, Mr. Vulkan. Maybe there was a record that I was in the bank. Possibly there wasn't. Maybe the guy put that I had a meeting at 3:30 with Neil Vulkan. But now when I go to the bank, they say what device I logged in on, where was I, how long I logged in for, how long it took me to type the password, and how many times I tried before I succeeded. How quickly I click the mouse. Do I read the information or not? There's an enormous amount of information that's being tracked all the time because of the digital nature of these interactions. And some of it is useful. Some of it is useful. So they would learn to, if it's useful, they would learn to use it. For example, deducing things about my personality that may be relevant to my financial personality. So it is a good thing that they are learning this stuff, but it means they have more and more data, and it's very sensitive data. Even though I just thought I'm logging into my online bank account, really I've revealed, if you like, very intimate details about my personality that can be used. And so it's very important that we are aware that this kind of new level of data is being stored, and it's being stored on the cloud, and there could be lots of issues relating to that. So, sorry, I went very, very quickly through what I hope you agree with me is a very big industry, and some of our thoughts on it. And I think I'm up in 20 minutes. So thank you for your patience, and we move on to our next speaker.